The role of central banks in currency debasement is a critical topic in today's economic landscape. As guardians of monetary policy, central banks wield significant power over national currencies. However, their actions, particularly in times of crisis, can lead to unintended consequences, including the debasement of currency, which erodes the purchasing power of individuals and undermines economic stability. In recent years, central banks worldwide have adopted aggressive monetary policies to combat economic downturns. This includes extensive money printing, often referred to as quantitative easing. While these measures aim to stimulate economic growth and prevent deflation, they can also lead to inflation and devaluation of the currency. As central banks inject more money into the economy, the supply of currency increases, leading to a decrease in its value over time. Prominent financial analyst Lynn Alden highlights the inherent problem with fiat currency. Its supply can expand infinitely, while the goods and services it represents remain finite. This inflationary pressure results in currency debasement, where the purchasing power of each unit of currency diminishes. As a result, savers and investors find themselves scrambling to protect their wealth, often seeking alternative assets that can retain value in an inflationary environment. Central banks often justify their actions by claiming the need to manage crises, stimulate economic activity, or finance government deficits. However, this approach can create a cycle of dependency on monetary intervention. As central banks continue to print money, they risk creating a loss of confidence in the currency itself. When individuals and businesses perceive that their currency is losing value, they may turn to alternative stores of value, such as commodities or cryptocurrencies, further exacerbating the problem. The consequences of currency debasement are far-reaching. Individuals on fixed incomes, such as retirees, are particularly vulnerable, as their purchasing power diminishes while prices rise. This situation can lead to social unrest and economic inequality, as those with assets that appreciate in value benefit, while those without are left struggling to make ends meet. Bitcoin emerges as a potential solution to the challenges posed by the central bank policies. With its decentralized nature and fixed supply of 21 million coins, Bitcoin provides a hedge against inflation and currency debasement. Unlike fiat currencies, Bitcoin's supply is predetermined, making it immune to manipulation by any single entity, including central banks. This characteristic positions Bitcoin as a viable alternative for those seeking to preserve their wealth in an increasingly unstable economic environment. Michael Saylor, a prominent advocate for Bitcoin, refers to it as digital gold, emphasizing its role as a reliable store of value. Bitcoin's scarcity mimics that of precious metals, providing individuals with an asset that retains value despite the inflationary pressures created by central banks. As more people recognize the limitations of fiat currencies, the demand for Bitcoin and other decentralized assets is likely to grow. Additionally, Bitcoin's design includes a process called halving, which occurs every 4 years. During this event, the reward for mining new blocks is halved, effectively reducing the rate at which new Bitcoins are introduced into circulation. This deflationary model stands in stark contrast to the inflationary practices of central banks, offering a compelling argument for individuals seeking to protect their savings. The role of central banks in currency debasement raises important questions about the future of monetary policy. As central banks grapple with the consequences of their actions, the need for alternative financial systems becomes increasingly apparent. Bitcoin and other cryptocurrencies represent a shift toward decentralized finance, allowing individuals to take control of their wealth without relying on traditional banking systems. In conclusion, the role of central banks in currency debasement is a complex and critical issue that impacts individuals and economies worldwide. While central banks aim to stabilize economies through monetary intervention, their actions can lead to inflation and devaluation of currency, eroding purchasing power and creating economic inequality. Bitcoin offers a potential solution, providing a decentralized alternative that empowers individuals to preserve their wealth. As the economic landscape evolves, the need for a more stable and reliable monetary system will become increasingly vital, positioning Bitcoin as a key player in the future of finance.